Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, April 21st, 2023. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. When you just look at the short view of it here, price sitting right here at the upper edge of this larger range right here that is developed. That larger range right here, again, bottom of which is down here at the previous year's close. The upper end 4,200 and the FOMC key level from last May of 41.86.5. That zone right there becoming resistance. Sometimes you see a strong rejection at the edge that brings you down. Sometimes you build a box at the extreme and then reverse the other way. We've seen this box develop and reverse this way. Now we've got one right here building. Are we going to see the same type of price action ahead where we move toward the lower end of the range? Or is this going to be one of those times where we poke above the range only to fall back in later on? We did that here recently as well. If you back this up a little bit more, right over here, that's a time right there where price poked through, held for a moment, dropped back below, held the edge, and dropped across the range. So again, how are we going to play out of this range? Still yet to be seen, but this is now 3 full weeks trading inside this narrow range. It's widened the range a little bit on either extreme, but to go 15, 16, 17 days sideways in such a narrow range here, again, is incredible. Continues to build energy, and next week again could be the week where we finally begin to see some sort of expansion up ahead. So watching this range for expansion from an intraday perspective right now, holding this edge would open up a bit of a bounce back toward 13,150 in weekly VWAP, rather the 41.65 rather, and perhaps the previous week's close at 41.72. That could be ahead. The 13,150 is for the NQ to come. Right now, still trending up. So again, no signs of major rejection or failure just yet. Although we have, for all intents and purposes, reached the extreme of the range, so we could begin to see this thing falter at some point. Alright, let's take a look here at the NQ. Again, right now, from a short-term perspective, this thing has been super sideways and no directional conviction at all. Not even from an intraday perspective. You start down one morning, you end up by the afternoon. Down, you end up. Up, you end down. This had good directional conviction, but every one of these days right here was going in both directions of the day, only to stay flat overall within the range. So we haven't really seen much in the way of directional conviction from a multi-week perspective or even an intraday perspective as this market builds some energy. This is about as narrow a price range as you can get over this many weeks and not see expansion just yet. It is sitting above that 13,920 level right there. That's the FOMC edge, or the FOMC key level and the key range edge, and that's going to be a very important level right there. It's actually the FOMC from right here. That's the March 22nd FOMC, and it sits right on top of the key range high, and that right there makes a very important combo. If we fail here, that could open up quite the return back to 12K, maybe even open up movement beyond it. So it's going to be a significant move once we get a breakout. From an intraday perspective, again, we haven't really seen much in the way of directional conviction. If we do drop to the edge, 13,925, expect to bounce back up. We could bounce as high as weekly VWAP 13,150. If we take a look here at crude oil, now crude has made a way downward toward the 75.70 previous month's close and previous quarter's close. That right there was also the gap where we gapped up on news-related headline risk there. This thing rallies up, hits the FOMC, drops away. That failure at 82, 81.50 opened up a quick return to 79. Breaking 79 opens the door to 75.70. Right now we've seen early strength this morning, but it's counter-trend strength right now. It's morning strength in a very clear downtrending market. So is that morning strength going to be defended and sold? This midpoint from yesterday is right at 78, so price could rally up to 78 and start to see weakness. It can get just beyond 78 and see weakness, but today could turn into an inverted checkmark trend day down as this market continues to work down towards 75.70. Perhaps we don't get there today, but it certainly could, especially if this is the top end of the day's range. This market's been averaging about $2 per day on a 5-day basis, and from 78 minus $2, it takes you to 76, and that would be just close to that 75.70. So there is the potential. We may not get it full on today, but again, this could be the early strength here that that precedes perhaps some selling pressure later on in the day. Taking a look at gold futures, this one's down 1% right now, still struggling at the 2,000 level. So 2,000 right here. We've obviously seen this thing remain in the bullish trend here, but since that strong rejection at 2060, we've seen price basically hold right here off this edge, which is around the 2025 level. That 2025 level is held ever since it fell back below it on that day right there. And it kind of creates almost a head and shoulder type of feel to it. Shoulder, head, shoulder, with the potential to drop to the next pivot low, maybe even lower. So again, being suspect of this bullish tail here the other day was a good way to go. I mean, closing near the midpoint and doing so after a strong rejection at a key level. If there's a failure there, it opens up the next move. So 2025 is going to be the level to watch here. If it can get through that level, perhaps we get another run at the highs, but staying below that level will be a short-term level to watch for directional conviction, because staying below that level starts to put pressure to the downside. We could eventually go test that 1940 edge up ahead. Lastly, taking a look at the YM. YM's been averaging 280 points per day. 289 on a 10-day, 272 on a 5-day. Right now it's at 133 points for the day. It's also trading within a narrow range inside day. This has been one that has continued to work higher toward the 34,500 level, right about here. Continues to honor the bullish Pima trigger zone. This thing has been very strong. The 33.8 is kind of the top of the previous range here. You have this little narrow range. Can it hold this edge and start to make a move to the upside next week? Again, there's been no real signs of failure just yet. We obviously have seen some strong highs come in at the previous week's high. We've seen a squat bar develop up there, and so far lower lows, lower highs over the last several days. But we've still seen such a bullish trend that has developed since late March, and it still remains intact until proven otherwise. Perhaps a failure through 33,800 opens up more weakness, but if it can hold this edge, maybe it can go get that final move into the top end of that market structure. Again, 34,500 to 34,550 would be that target. We have a naked FOMC that's just above that at 34,617. So we could still have a little bit more upside here ahead if price can continue to hold this edge. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.